And this argument that people have had for years that, well, Bitcoin isn't backed by anything. Bitcoin doesn't represent anything. Here's the beauty of that. Bitcoin trades purely based on the sentiment people have in its value and its scarcity. And so it's a much more pure form of investment. And when you see Bitcoin move, yeah, it has 2 times the volatility of an S&P or a NASDAQ, but look at how fast it bounces back. That speaks to the amount of demand there is for Bitcoin. And that speaks to the health of the Bitcoin liquidity market today.
As the largest and most well-known cryptocurrency, Bitcoin's performance is closely watched and analyzed to predict its future movements and gauge market sentiment. Investors and analysts scrutinize various factors, including technological developments, regulatory news, macroeconomic trends, and market demand to understand Bitcoin's trajectory. Volatility is a hallmark of Bitcoin, often driven by speculative trading, global events, or shifts in investor confidence. Given Bitcoin's unpredictable nature and its susceptibility to various market forces, understanding its risks becomes even more crucial. This sentiment was echoed by Fred Thiel, CEO of Marathon Digital Holdings, in a recent interview with Robert Breedlove, where he discussed both the challenges and opportunities facing Bitcoin in today's evolving landscape. He highlighted liquidity risks linked to Bitcoin ETFs, which buy Bitcoin a day after shares are purchased, making them vulnerable to weekend price volatility. Thiel warned that rapid selling by regular investors could overwhelm the market, causing significant price drops. He also mentioned that concentrated ownership, such as by governments, could limit liquidity. Additionally, he noted that about 20% of Bitcoin keys are lost, reducing available liquidity and increasing demand for derivative financial products. Thiel emphasized understanding these risks and their impact on market stability and investor exposure, urging caution and awareness of potential consequences. Watch clips from the interview for further insights into Fred Thiel's conversation with Robert Breedlove. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
Do you think the ETFs present certain risk?
I think that the biggest risk is a market liquidity risk.
Yeah.
Right? So you can kind of think of it this way. You have the open market, right? The Coinbases of the world. Then you have the OTC market. The ETFs essentially operate on a T+1 basis. So if you go buy shares in an ETF on Monday, they go into the market and buy Bitcoin after market close or the next day, and it settles the next trading day. And so if you buy shares on Friday, then they're doing buys on Monday.
Yeah.
Which means what happens to Bitcoin over the weekend can influence the price of the Bitcoin that they buy on Monday. And there's a lot of trading around that. As the volume of Bitcoin in ETFs grows, and you think about how many retail investors operate, bad news, stock exchange drops, the NASDAQ, S&P 500, whatever, drop 10%. Well, if they decide to sell 10% of their holdings in Bitcoin all at the same time, the market is still fairly thinly traded in the open market. And so you will likely see a bigger drop when there's a drop. And the OTC desks may not have the capacity to absorb that volume. People have to be very careful how they look at the markets, because when you get too much Bitcoin sitting in a concentrated set of hands, when those hands make a decision and move, things can happen that are disproportionately more violent than otherwise. Now, what's interesting is what's going to happen, I would say, in the next 6 to 12 months is we'll see a whole series of derivative financial instruments, which will allow people to trade essentially risk and hedge risk in the ways people can do around other commodities.
Right.
In the oil industry, there's all sorts of ways you can do things to hedge your risk. And so we're going to start seeing more and more of that around Bitcoin as a way to create a much more liquid market. Because imagine a future where the US government owns 2 million Bitcoin. That's 10% of the available Bitcoin. Saudis, Russians, Chinese, India, et cetera, decide to own 20% in aggregate. Okay, now that's 30% of all the Bitcoin in the world has suddenly just is off the market. So that leaves 70%. And you could argue that roughly 4 million Bitcoin, the keys are lost. I mean, Satoshi's wallet, stuff like that, right? Okay, so that's another 20-ish%. So now you're at 50% of the Bitcoin is kind of locked up. And then throw the ETFs in there, already at 1 or 2%, MicroStrategy, 1% and growing. Okay, so now you're kind of at 60%. Not a lot of liquidity in the market. And so you either have to get in now, or it's going to get a lot harder. And the market's going to have this roaring demand for these derivative instruments. And so you're going to see the actual liquidity speculating on Bitcoin as an investment asset grow exponentially over the next few years. And this argument that people have had for years that, well, Bitcoin isn't backed by anything. Bitcoin doesn't represent anything. Here's the beauty of that. And that is that Bitcoin trades purely based on the sentiment people have in its value and its scarcity. Period. That's it. And so it's a much more pure form of investment. And when you see Bitcoin move, it has 2 times the volatility of an S&P or a NASDAQ, but look at how fast it bounces back, right? If Tesla produces bad numbers, the stock drops, you have to wait till the next earnings before the stock likely starts rolling back up again. Mt. Gox, or the state, the German state that sold all this Bitcoin a couple of weeks ago, price dropped, came right back up. Right? You look at the dips we've had and the amount of volume of Bitcoin that's gone into the market that's been absorbed quickly, and the prices come right back up.
Yeah.
That speaks to the amount of demand there is for Bitcoin. And that speaks to the health of the Bitcoin liquidity market today.
Fred Thiel pointed out the potential of the United States establishing a national Bitcoin reserve, noting the country's history of maintaining gold reserves. He mentioned that the United States needs to fund its debt and may invest in Bitcoin, which could increase in value over time and balance the debt. He explained that if the US held 2 million Bitcoin, it could be worth $40 trillion, more than the existing federal debt. Fred Thiel believes that if the United States implements this plan, other countries will follow suit because they do not want to be left without a strategic store of Bitcoin. This might result in a decentralized Bitcoin mining landscape, with countries maintaining their mining pools for national security, forcing miners to become more efficient. Let's go back to the interview and watch more clips to gain insights from Fred Thiel.
Do you see the possibility of the United States moving into a stage where we actually have a national Bitcoin reserve? And if so, do you think other countries would emulate that strategy?
Absolutely. The U.S. is the single largest holder of gold in the world. The dollar's not backed by gold, but gold allows the U.S. to project power into financial markets. Other countries hold gold as their reserve. And actually, it was the holding of gold that drove Nixon to decouple the dollar from gold, because other countries were withdrawing their gold from the U.S. system because they saw the spending that was going on at that period of time, and they thought the U.S. would go bankrupt. The U.S. needs to fund its debt somehow. And if people aren't buying dollars or putting things in dollars, that is a precarious situation. So that leaves the U.S. with only a couple of alternatives. They either have to let the dollar drop in value significantly and have high inflation so they can inflate away the debt, but that would be disastrous. The other thing they can do is they can invest in an asset like Bitcoin, which will over time appreciate in value. And if it can appreciate at a rate faster than the U.S. total debt appreciates, then now you have something you can use to offset the debt over time. And if the U.S. were to hold 2 million Bitcoin, and that Bitcoin goes to $20 million over 10, 20, 30 years, then now all of a sudden the U.S. would be holding at $20 million, roughly 40 trillion plus. Well, the federal debt today is 35 trillion and growing. There's no way the government can service that debt at current inflation levels, interest rate levels.
Yeah.
Right? And so the minute the U.S. does it, they will now have the ability to project power in the Bitcoin market because they will have pricing power because of their supply, just like they do with the Strategic Petroleum Reserve. If the U.S. does it, then everybody else is going to have to do it, because you can't be a country and not have a strategic reserve of Bitcoin if all the other countries have it.
Right.
And countries like Russia, China, and others look at Bitcoin as a neutral currency that isn't controlled by a government or a country, that allows them to trade independent of any sanctions the U.S. would ever do. And so if the U.S. wants to keep them from trading in violation of sanctions, they have to also have enough Bitcoin so they can impact that market. And so it becomes an issue of national security, which has nothing to do with cybersecurity or anything like that. And when President Trump talks about we should have all Bitcoin mining in the U.S., part of that is a thinking that if you have Bitcoin mining in the U.S., then you have the ability to determine what transactions get processed, which is why every single sovereign who wants to hold Bitcoin is going to want to have mining in their country, and which is why they're all going to want to operate their own mining pools so that you can't essentially through sanctions, OFAC, et cetera, control their ability to transact in Bitcoin. So the implications of Bitcoin becoming a sovereign reserve asset are that every country in the world who wants to hold Bitcoin should have Bitcoin mining in it, which will lead to a huge decentralization of Bitcoin mining, right? And that will force Bitcoin miners to have to become super efficient at what they do. And so we believe that over time, more and more Bitcoin mining will be done from a perspective of free energy, as we call it. And so we started a business unit within our company that does energy harvesting. So energy harvesting takes wasted energy, underutilized energy, converts it into Bitcoin, and then takes the heat from that conversion process and feeds it back into an industrial process. So you may have seen recently we announced we're heating 11,000 homes in Finland using Bitcoin. It takes 2 megawatts of power, and we could heat 11,000 homes. So we get paid for heat. That offsets our cost of electricity.
Meanwhile, as the Bitcoin options expiry date approaches on August 30th, traders are bracing for a wild ride. With $3.6 billion in potential value ready to expire, all eyes are focused on the put-to-call ratio currently at 0.61. This indicates a slightly bullish sentiment, as more traders are betting on price increases, calls, than declines. Looking closely, we can find 37,477 Bitcoin in call open interest and 22,839 Bitcoin in put open interest. The maximum pain price, at which most traders would incur losses, is set at $61,000, which is close to Bitcoin's current trading value. This suggests that traders predict stability or a little price increase in the short term. The data shows an even more positive prognosis moving forward to the expiration date of September 27th. Total open interest has increased to 76,630 Bitcoin, with a lower put-to-call ratio of 0.56. Notably, a massive 49,226 Bitcoin in call open interest is concentrated at the $90,000 strike price, indicating a strong bet that Bitcoin will reach or exceed this level by late September. The maximum pain price for this expiry is $58,000, lower than the trading level, indicating that prices will rise significantly. Further out, the December 27th expiry shows bullish sentiment with a total open interest of 72,839 Bitcoin and a low put-to-call ratio of 0.34. Traders are looking for higher strike prices, notably $100,000. Which might indicate large price gains by the end of the year. The maximum pain price for this expiry is $60,000, but the concentration of open interest at considerably higher strike prices points to a long-term optimistic view. As we conclude, what do you think about this interview? What scaling solutions would be necessary to support a surge in Bitcoin demand if multiple countries adopted it as a strategic reserve asset? Please drop your thoughts in the comments below. Share this video and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.